Hey, you guys, what's going on? It's your big dreamer and doer, G Dinero, with a Wealthy Wednesday tip for you. Today, we're going to take a look at STRF and compare that to real estate. And just so you guys know, quick, very overhead view of either of these, okay? Remember, none of this is tax, financial, legal, investment advice. It's your buddy, G Dinero, helping you to increase your financial literacy to help put you and your family on that path to financial freedom. So let's jump in. The inspiration from this comes from my best friend, John. We've been friends for over 45 years now. That's he and I at the recent Bitcoin conference just last month at the end of May. And he was talking about he's been a real estate guy his whole life, right? He's currently got a few properties that he rents out regularly. He has his own house that he's living, that he owns and he's fixing up right now. He rents a condo for he and his wife that he's living in on the water. So this guy's been involved in real estate a lot. Me, on the other hand, I've been in stocks my entire life. I do own real estate, but it's for personal use and to live in. I've never been a landlord. I've never rented out properties to other people. And so we were kind of in this discussion, and he sent me a note last night and said, hey, there is, he said, I kind of did some back of the napkin math comparing STRF to real estate, to renting out real estate. And he said, it looks like STRF came out the winner. And I said, this would be a good video to just very high level view of the whole thing. So let's dig in. So here's the dilemma. If you had, let's say, $250,000 and you were able to put that into a rental unit or into STRF. So STRF, that's Strategy B or MicroStrategy's preferred shares with a 10% cumulative dividend or yield based on 100% par value of the stock. What does all that mean in English? It pays out about a 2.5% dividend every quarter. Okay, so $2.50 dividend every quarter based on a par value of 100. Currently, the shares are trading a little over 100. When it launched, they were a little under 100, but it's to be at a par value of around $100, okay? Rental unit, on the other hand, I'm assuming a $250,000 condo with either 50% down and a 7% mortgage or paid in full with cash, right? There's a couple of different ways that it could be done. If you're paying in full with cash, you don't have anything left over to invest, but you also don't have a monthly mortgage payment. It's like you just put the money in and everything you take out is yours to keep minus whatever the ongoing monthly expenses are. So first off, here's the fund. And if you put $250,000 in STRF at $100 par value, and again, right now it's not quite at par value. I think it's trading at around $105 a share. So $250,000 would buy you 2,500 shares. Currently, again, if it's at 105, super quick, back of the napkin math, 250,000 divided by 105 would buy you 2,380 shares. So you'd only be able to buy 2,380 shares. It would affect these calculations slightly because that's 120 less shares that you're earning a $2.50 dividend on a regular basis, okay? But we're going to talk about par value for this. So 2,500 times a $2.50 quarterly dividend equals $6,250 a quarter. Annually, this is $25,000 per year. $25,000 per year. You'll see that the effective yield currently is 9.7%. I took this straight off of their website today, and had I looked, there's the STRF price at 103.08. So 103.08, let's go ahead and put that number in, $250,000 divided by 103.08 would buy you 2,425 shares. If you multiply that by a $2.50 dividend, it's $6,063 a quarter, and annualized, that would be $24,253 a year. So again, somewhere between $6,000 and $6,250 a quarter, and somewhere between $24,000 and $25,000 a year is what this fund would yield you. Okay, not bad, right? For doing nothing, you invest in the fund, park the cash there, let it work in the background. Think maybe you're retired and you're looking for a way to generate some income and you have some money saved up, and this is a way to generate income for you to be able to live off of. Now, let's move over to the condo. The condo, $250,000 is what the condo would cost. You could rent it out for, let's say, $2,000 a month, maybe, right? Rents are going to vary dramatically depending on where in the country you live. Like I took this picture, looks like it's a European picture because of the license plate on the car. I just grabbed a stock picture of a condo, okay? But condos in Miami or in New York or in San Francisco, first of all, you're not going to be able to find one for $250,000. And second of all, you're going to be able to rent them out for more than $2,000 a month, right? Whereas if you're in the Midwest somewhere, you probably could pick up a condo for $100,000 or $150,000, and you may only be able to rent it for $1,500. So there's a lot of fluctuations there. Again, I'm not a real estate guy. I just went with what John kind of threw out to me of what we think it could generate, right? So let's say $2,000 a month, plus or minus $250 either way. And you need to include other costs, though, when you're dealing with real estate. There is real estate taxes. Taxes have been going up dramatically in the last 4 or 5 years because these governments need to fund themselves somehow so they can keep frivolously spending like crazy. Yes, that's my plug on that. Sorry. Not sorry. You also have insurance, right? You have to cover the insurance on these things. And insurance has also been going up dramatically because of all of the natural events happening. Fires out west, hurricanes in Florida, where I'm from. You've got earthquakes in certain parts of the world that you've got to deal with. You've got tornadoes in the Midwest. You've got flooding that's been really rampant on the East Coast, right? In places like North Carolina and West Virginia with huge flooding. So all of those things are risks that you need to mitigate through the use of insurance. And you may be underinsured, or you may have to pay through the nose for insurance, or you may get dropped from an insurance company. So again, that's another cost you have to deal with. There's homeowners association dues. A lot of times when you're in a condo, it's not like you own a single family residence sitting there by itself that's maybe not in a homeowners association. Condos, 99% of the time, there's homeowners association dues. Those don't go down over time. They go up over time, right? And there's a special assessments through the homeowners association. Plus there's the ongoing, so that's included in the maintenance and repairs. Plus there's the ongoing maintenance and repairs of your individual unit, what you're responsible for. Hot water heater goes on the inside, or somebody spills something, it stains the carpet, and the carpet needs to be cleaned or repaired or replaced. Maybe painting on the walls. All of those things add up, right? There's constant upkeep when you're talking about real estate. So let's say it does generate $2,000 a month in rental income. That's $24,000 a year, but again, not including the other costs. Now, I also know there are tax benefits of real estate when compared to investing in funds. I completely get that. I'm not a tax professional. I said that the disclaimer at the beginning, I don't give tax or financial advice, so I'm not going to put that into this breakdown, but that might offer you some benefits. Would offer you some benefits over investing in a fund where there are no write-offs or tax benefits. Now, the twist, why do one or the other? Why not both? So you could put $250,000 into the condo, put $50,000 down, and finance the other $200,000 at 7% interest for the next 30 years. That would be $1,330 a month in mortgage payments. You take the remaining $200,000 and invest it in STRF. So the rent would generate you $2,000 a month or $24,000 a year. STRF would generate $1,667 a month or about $20,000 a year, again at 10% with a par value of 100 on the shares. And you'd still have your other costs though. You still have the real estate taxes, the insurance, the homeowners association, the maintenance, the repairs, dues, all those things. So you're netting $3,667 minus the $1,330 mortgage payment equals $2,337 a month. But that also does not include the other costs, and it does not include the tax benefits. Again, it would be insanely complicated for me to try to do a video on that because I'd have to know the exact tax complications and situation that you're in, and I'd have to know the exact costs in the situation that you're in, right? But just some things to think about there. That would generate about $28,000 a year before all those other costs. So here's the final comparison For me, and again, I'm biased on this, right? The condo to me sounds like a ton of work for about the same amount of money as STRF, right? So STRF, simple. And I'm not saying go put your entire investment in STRF. This was a comparison of a preferred stock fund to a condo and rental income. That was it. It wasn't including like investing in things like MicroStrategy or Tesla or Nvidia or iBit or anything else in the stock market, right? This was just a fixed income product versus another way of generating income, which is real estate, right? So here's the overall comparison. STRF, to me, it's simple. It's a single investment, right? You just make the investment one time and forget about it. There's nothing ongoing. There's no ongoing monthly costs or anything else. You put the money in there, you park it, and you forget about it. It's over collateralized. What do I mean by that? Well, it's collateralized by the Bitcoin holdings because, again, MicroStrategy or Strategy B is the largest Bitcoin treasury company in the world. They have billions and billions of dollars collateralizing these preferred share stocks. So if they have 42 or 50 or 60 billion dollars worth of Bitcoin on their balance sheet, and they only need to pay out somewhere in the neighborhood right now of $300 or $400 million a year, maybe $500 million a year in dividend payments for these preferred share stocks, then at the end of the day, that's really not very much, right? They are way over collateralized. They can easily sell these preferred share stocks, use that money to buy more Bitcoin. The Bitcoin is going up at 25, 35, 45, 55% per year in value, which allows their common share stocks to go through the roof. They can then sell more of the common share stocks to do what? Buy more Bitcoin with, which makes these STRF, STRK, and STRD even more collateralized. So it's kind of complicated, I know. If you want to look for guys that really get this, go to the MicroStrategy True North crew. There's a guy over there, Jeff Walton. He goes by Punter Jeff on X. Great follow, where they go into the whole collateralization side of things of these fixed income products. But just realize that people are worried. What would happen if Bitcoin were to drop in value? Well, currently it would need to drop to close to $14,000 and stay there before Strategy B or MicroStrategy would be in any kind of hot water or trouble with these products. Okay, and the likelihood that Bitcoin is going to go from $105,000 where it is today all the way down to $15,000, let's say, and stay there is extremely low now that there's all these major players, the ETFs, the treasury companies, the sovereign wealth funds, the countries themselves that are now involved in this space. So the likelihood of that, very low. Regulated, it's regulated, right? This STRF is a regulated fund. It's available through your broker. So that's another thing that doesn't mean that there's FDIC insurance on it, but it means that it's regulated, that they're no funny business. They have to report every quarter, and it is a very liquid investment. What do I mean by liquid? It trades like a stock. So if all of a sudden you had $250,000 there and something happened and you needed to raise $50,000 immediately, you can sell $50,000 worth of your STRF shares, have that money hit your account within minutes, and then however quickly you're able to remove it from the brokerage. Each brokerage has their own rules, but realistically, within a day or two, your funds are in your other account and available for your use in the case of an emergency. Not the same with the condo. The condo to me looks complicated, right? Finding a place that is in a desirable area where you'd consistently be able to keep it rented, where you don't have to worry about natural disasters as much, where you don't have to worry about crime or what type of renter you're going to attract or not attract, right? So that to me just seems super complicated. First of all, trying to figure out where to go and what to do. Second of all, there's an ongoing investment cost, the taxes, the insurance, the repairs that we've talked about. Those things don't stop when you own real estate. They keep going. I know. I'm up here at my second home in Georgia today, and I've got a little bit of a roof leak that I'm going to have to call a roofer today to come out and go fix, right? Those things just happen over and over and over again. There's the fact that it's an appreciating asset, okay? STRF may or may not go up in value, right? Right now it's trading at 103.08. It's been as high as 107, 108. It's been as low as $86 a share, but it's going to trade on either side of par value or $100 with relative certainty. May trade at a premium, again, up to 105, 110, maybe even up to 120, but it's kind of a self-regulating asset. Whereas the condo, we are used to real estate appreciating over time, right? Our houses go up in value. Many people use them as a store of value, right? As a savings account, a glorified savings account at the end of the day. But I put a question mark by it because is that going to continue in the future? Is that going to continue forever? Right now, housing prices are actually coming down. They're more difficult than ever to sell. People are starting to factor in the other things like insurance, like rising property taxes, and factoring that into the cost of the house. So sure, the house may have gone from $300, or in this case, $250,000 to $300,000. But if insurance and homeowners association and taxes have gone up accordingly, somebody else may not give you the full $300,000 value of the condo because they need to have a whole bunch of money left over to pay all those other rising costs. So those are going to have to get factored in even more in the future. It's also pegged to fiat dollars, right? STRF is pegged to Bitcoin at the end of the day. 1 Bitcoin today will equal 1 Bitcoin tomorrow will equal 1 Bitcoin in 10 years. $1 today is not going to be worth or spend like $1 10 years from now. In fact, it'll have lost more than likely over half of its value within the next 10 years. So $1 will spend like 50 cents. That's that inflationary world that we live in, right? Or the debasement of the dollar that we've talked about in past episodes. You got to find renters. Right? What a royal pain in the butt. Screening renters, you get somebody in there that kind of screws you over. John and I have a friend that ended up in jail for drugs. It was a friend that he was helping out renting one of his units to, and that friend ended up in jail. Guess what? No rent payments at that point, and he has to evict the guy, even though he gave him ample opportunities to try to repay him. So that's another thing that you have to factor in is the renters. It's illiquid. You can't just go, okay, in that same situation, I need $50,000. Let me sell 20% of the condo to raise the $50,000 that I need to go handle an emergency, right? Yeah, you might be able to take out a HELOC or a home equity line of credit against it, but now you're borrowing money that you're going to have to turn around and pay back with interest and everything else. And it's just another loan. Well, what if you already had a loan? What if you went the mortgage route already? You may not have that kind of equity in the home to be able to take out or in the condo to take out. So it's extremely illiquid. You can't just pick up the condo and move it somewhere else or take out the funds and move them somewhere else. Finally, one of the benefits of the condo is the tax benefits that it generates, right? There are certain ways to depreciate the asset. And I think there's a new law that you can depreciate the asset fully in the first year. Again, it's way beyond the scope of this presentation today. The presentation was just a very simple comparison between investing in a $10 or 10% yielding fund versus putting money into a condo to generate income that way. Guys, I hope you found value in today's video. Make sure you like this video. Comment below. What'd you like? What'd you learn? What would you like to see more of? Make sure that you're subscribed to my YouTube channel so you see more videos like this. Also, book a course with me, right? I teach courses on TradingView and technical analysis, as well as understanding options. If you've already done one of those and you want to take it a step further, book an appointment with me at gdinerocoaching.com. And finally, remember, I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in, and we'll see you next time.